what's the argument for Bitcoin for you to invest, like see it as an investment?
I think, like, firstly, when someone like Warren Buffett says something, really anything, you stand up and you listen, because someone like that who's quite wise, you can't rule out the possibility that they're right. So just playing devil's advocate on myself, right? Like, I've kind of gone through the conversion experience where I've done my 1,000 hours of research, and I've come out the other end and I realized, yeah, this is actually legit. The intrinsic value is trust, and that's the part that I think most people don't get when they come up with that first objection. When I first looked at it, I didn't believe that it was real either. I believed that nobody should be able to create something out of nothing.
Welcome back, Leverage Addicts, to another episode of Leverage Addict Podcast, where we delve into property investing and finance strategies tailored for the New Zealand market. I'm your host, Blandon, and today you guys will be familiar with this face here, Darcy Ungaro, a financial advisor, and he's a strong advocate for a diversified portfolio. So although I like to talk properties with Darcy, what I like to quiz him more on is his passion around, Bitcoin and cryptocurrency and the technology in that space altogether. So Darcy, it's great to have you on the show again.
Hey, thanks for having me, Blandon. Really appreciate it.
Awesome. And today, just to make it a little bit more interesting, is that, believe it or not, I don't actually have any Bitcoin or cryptocurrency at all. So I've got $1,000 ready to go. And if Darcy can convince me by the end of today's podcast, I don't think I can buy 1% anymore because it just went up over 110 or something. So I will buy 1% of one Bitcoin off Darcy. And he's got I assume you got your wallet ready to go. I don't even know how to do that transaction.
I got my wallet ready to go. Yeah, definitely.
We'll figure it out after the show. But let's see if you can convince me to get into it. I guess the reason why we are doing this today is, well, we talk about properties a lot, but properties have been quite volatile, same as, and it's a reflection of the monetary system as well. Interest rate goes up and down, and monetary system, there is what we call inflation, right? The value of the dollar devalues, and crypto is a way of hedging for that. And so the thing that I wanted Darcy to convince me today on is like, well, do I need to take a diversified approach? And am I too late for the crypto train? Because in March this year, I think it almost doubled, right? So now it's like, it just seems like it's at a peak. And so for people who are listening, and maybe you don't dive into crypto too much, let's start with why crypto was created in the first place. Like, perhaps Darcy, you can give us a quick rundown and a basic tutorial.
Sure. I'll keep it real high level, because that's kind of like, that's probably all I can do is at a high level. I understand it to the point where I can interact with it, but there are areas where you can go very deep into this space in terms of a technical understanding. And especially if you have like a computer science background, a lot of this will probably appeal to some people more than others. But really simply, cryptocurrency, all it is, well, what I like to call it is magic internet money. It is a different form of value that exists.
I already
in
lost
the
confidence
internet.
when you said magic.
It's only magic because we don't understand it, right? So, like, I've heard it described once as, if you take everything that you don't know about mathematics and everything that you don't know about money and you roll it all up, that's crypto. So we're really into the weeds when we talk about crypto, or cryptocurrencies. So cryptocurrencies are a subset of digital assets, and digital assets just means something of value that exists in a digital form. And cryptocurrencies are types of value that are made secure using the technology of cryptography. And the best way that I've probably heard it, and I'm going to rip a bit of paper if that's okay, it's going to sound really noisy in a second here, but if you think about this right there, there's this concept of an indentured servitude, I think is what it's called, where when people came to the United States on sailing ships like 300 years ago, there was a bit of paper that was ripped in half, and on one side was one bit of information, on the other side was the same bit of information. And so when they got to where they were going, they would join the bit of paper together exactly to determine that it was an authentic document. And when we hear the word blockchain, that's what I always go back to, is that idea that something has been ripped apart, or it's been hashed, if you like, it's been scrambled up, and it can only be put back together a certain way. And that's just a way of authenticating or validating something as being true. And
Mm.
so when you hear about blockchain powered technology or cryptocurrencies, that's kind of what underpins it, is this database, which is often decentralized, which just means it's scattered over many, many computers, and they operate simultaneously, just processing transactions and validating transactions to make sure that nothing's occurring on that blockchain or that network, which is out of whack. And if it is, it doesn't get processed. So hopefully I didn't butcher it, but that would be like the first fundamental understanding of
Yeah.
what is blockchain technology, what is cryptocurrency.
So I get the whole blockchain is what they call like immutable. You can't really like tamper with it,
Yeah,
so there's less fraud. But if we go back to the origin idea of the blockchain, the crypto or electronic money, what was it that made people
right.
believe in this? Why? Why would they want to create this in the first place?
Yeah, what was the problem they were trying to solve, right? So when Bitcoin came on the scene in 2009, it was born out of the global financial crisis. So all of
Mm,
the research that was done before then kind of culminated in this white paper released by Satoshi Nakamoto, and this new Bitcoin protocol came on the scene. And the reason why it was needed was because there was a belief among many, especially following the global financial crisis, that the financial system was not serving the people, that the
mm,
people were, in a sense, slaves to the financial system. And so what Bitcoin represented was a way to take the money out of the government's hand and put it back into the hands of private citizens.
yeah,
That's that was unable to occur in the past, just because technologically it was really difficult to execute on that. But with blockchain based technologies, it was now possible. And so that was why it had to happen, was because it was very apparent. Well, in hindsight, it was very apparent probably from 1971 onwards, when President Nixon took the US dollar fully off the gold standard. It would have been obvious from then, but after the global financial crisis, the banks were being bailed out, but the people weren't. That's when it became apparent that we, the people, needed to rise up and do something and take the power of money out of the hands of government.
it's interesting. So essentially, what you're saying is people lost faith in the paper money or fiat money or whatever you
Yeah.
would want to call it. That system used to be more reliable because, every dollar was backed by some gold, but, they needed to print money for a war and they decided to go, you know what? We can just print money at will. And, like the financial crisis, the even COVID, when we just like, okay, let's print more money and put down the interest rate, and now we lose confidence in the actual monetary system that we have. I asked AI actually, what are the four key difference between the monetary system that we have versus, say, the crypto or the digital currency? And the first one is the decentralization and the centralization. Centralized being all your central banks, like it's at one place and it's operated by a human,
Mm.
and they can determine how much money is in the economy. Whereas decentralized is not operated by anybody, and
Mm.
the system is managing how much goes into it. The second was the transparency. So transparency, like you said, with the blockchain technology, everybody can see exactly what's happening. You can see how many coins Elon Musk owns, and like if you Google it, he has 750,000. He has $750 million worth of Bitcoin, and then
Yeah.
whereas in the current monetary system is not transparent. Like there's a lot of layers and securities around it. The third one was the lower transaction costs, because we've got banking, we've got
Mm.
a lot of middleman, and then the AI said it was much cheaper to do transactions in Bitcoin, and then lastly it was the global accessibility because we've got exchange rate, we've got different currency, whereas Bitcoin is just the one unified currency system, but
Mhm.
maybe there are different coins that you can have. So that was quite interesting when you can get that kind of level of depth of info from AI.
Oh yeah, but it's also just a good example of just how deep this space is, right? Like I don't know just how your mind works, but I know that a lot of people that are into property do have some sort of appreciation around the economics of money, and specifically what happens when you're borrowing money and why things go up in price. And it's not necessarily because they're getting more valuable or they're more in demand. Sometimes it is. Often it's just because the value of the denominator, the thing that you use to buy it, the dollars, they're going down in value. And
Mm.
I think that that's a fascinating, it's a fascinating gateway to understanding a lesson that we weren't really taught. And I've done an economics degree, but I was never really taught just how the structure of central banking works with the
Mm.
BIS, the Bank of International Settlements at the top, and just how much influence central banks have behind the scenes and overtly. And what we end up focusing on is often not actually what's really going on. And so things like understanding the future of money are really important as well. And again, that's where right now is really relevant, because what we're seeing with central banks at the moment is that there's a drive to introduce central bank version of cryptocurrency at the same time that different cryptocurrency networks are starting to get a lot of traction. And so I think we're at a really interesting pivotal time in history where the people are now at a critical mass where they can take the power of money out of the state, but at the same time, the state isn't ready to let go. So I think we have some interesting times ahead of us.
Yeah, that would be quite interesting to see how they actually try to adopt it on a in a countrywide level, because I think at some point the governance has to come into place. But hey, I don't know too much about how that world works. But that's what we are here to find out. So I want to ask you, maybe Darcy, you can explain like just briefly like the buzzwords are the most popular words and just what they mean. Like
Sure.
we've got the crypto,
Yeah.
we've got the blockchain, and then we've got the Bitcoin. So what are
Yeah.
those things and how do they differ?
Sure. Okay. So the underlying technology is called blockchain technology, which is a distributed ledger, and it's a decentralized distributed ledger. You then have chains made up of all sorts of different cryptocurrencies. So if you imagine like Ethereum, Solana, Cardano, Litecoin, it just goes on and on and on. There's literally thousands of them, but all they are value-based social networks in the digital sphere where you can own a piece of it. So the biggest of them is Bitcoin. And one of the key terms probably to understand with Bitcoin relative to many of the other cryptocurrency chains is that Bitcoin can only ever be 21 million. There can only ever be 21 million in existence. And the vast majority of it is already in existence. And
Mm.
every 10 minutes, there's a new block that is minted on the blockchain. And that block gets given to the miners to do their work in validating, basically running this financial system. So
Mm.
the entire system operates quite beautifully in the internet, where it's people are incentivized to do their thing, but there's no centralized authority overseeing it all. So the finite characteristics of Bitcoin and the infinite characteristics of some of the other crypto assets is really the differentiating factor. And this is where it's probably important to put out there this idea that it's about Bitcoin, not crypto. If you are a sound money enthusiast, and by sound money, I just mean if you believe in a hard version of money, that you were mentioning how fiat currencies or currencies by decree, by government decree, in the past, they were directly and indirectly linked to the price of gold. So I think it was after the Second World War, the Bretton Woods Agreement established that a US dollar would have gold behind it. And then that morphed into there was a new financial system worldwide where currencies around the world were able to be exchanged for US dollars. And then those US dollars could be redeemed for gold. So gold was properly underpinning it all. But then in
Mm.
1971, that was disconnected temporarily. It's never been reconnected. And so now there's nothing other than the war machine that underpins the currency. In other words, you don't pay taxes in our currency, you go to jail. And I think just depending on how far you want to go down this rabbit hole, a lot of the conflict around the world revolves around protecting US hegemony. And a lot of it is to do with maintaining the US dollar's superior position in the pecking order. But that's been challenged.
So I guess is, making sure that we understand, first of all, okay, what is it? Why would we even look at it? What is it? So you've explained,
That's right.
yeah, how the blockchain works. It sounds like to me, and I might be oversimplifying it, the blockchain is like this very technical mine, like gold mine, and it can't be broken, it can't be hacked. And then your Bitcoin is the gold, but it's not just above gold, but it's a technology. It's got a little bit more utility with every bar of gold that you dig up. And
Yeah.
and I guess what I don't understand is like why this machine that is man-made can't be destroyed or hacked by man. Like the people talk about how like it would take 20 years or something like that before they have good enough technology to be able to tamper with this system.
Yeah, it's beyond my pay grade to describe the technicalities of it, but it has been described as immutable. Like it cannot change. It is what it is. It's a finite set of code that's hanging in the internet. And so you can add to the blockchain, but you can't edit and you can't take away. And because it's distributed, if you can imagine, you have all these databases around the world that are constantly replicating and making sure that everything is the same. You destroy one part of it, but it's just a drop in the ocean. It has to be, you have to destroy all the computers that have this database operating. And so even if the internet goes down, like there's technology now, which as long as you have access to the technology, you can still create a mesh of networks that can replicate the Bitcoin database. Because of the way it works, it will always choose the most up-to-date version of it. And so in that way, you now have a digital version of a record keeping system that can last no matter what happens. And going back to what I was saying before, it is a version of hard money because it's digitally scarce. And we've never had digital scarcity before. We've had gold, and we have gold, but it's not 100% scarce and it's analog. It's hard to move it around as well. Whereas with Bitcoin, it's like digital gold, but it's because it's finite, you can effectively create derivatives of that, which then create more value in and of themselves. Like there has been NFTs or non-fungible tokens minted on the blockchain network, social networks. We don't even know exactly what can come out of the Bitcoin network because it is just a network. And just like your copper lines going into your home, probably couldn't foresee a time where we would be operating broadband through those cables. I think that's kind of what it's like with Bitcoin as well, because it's the biggest network and it's finite. It's very well established now. We don't know what will transact on it in the future, but the cool thing is you can own some of it now.
I like to maybe introduce the arguments against Bitcoin. I mean, you've got the gurus like Warren Buffett. He believes that there is no intrinsic value in terms of holding Bitcoin. It's not it doesn't actually produce anything. And because of I guess the other thing that he talks about is like it's a speculation. Because he always say is like if you're speculating, then you're gambling. And so what's the argument for Bitcoin for you to invest, like see it as an investment?
I think like firstly, when someone like Warren Buffett says something, really anything, you stand up and you listen, because someone like that who's quite wise, you can't rule out the possibility that they're right. So just playing devil's advocate on myself, right? Like I've kind of gone through the conversion experience where I've done my 1,000 hours of research and I've come out the other end and I realized, yeah, this is actually legit. I don't know if Warren Buffett would have done the same level of research, to be honest. And you can generally tell when you hear their version of what it is. And according to him, it's rat poison. I'm pretty sure it was him and not Charlie Munger that said it was rat poison squared, perhaps. So the intrinsic value is trust. And that's the part that I think most people don't get when they come up with that first objection. When I first looked at it, I didn't believe that it was real either. I believed that nobody should be able to create something out of nothing and claim it's worth something
Yeah.
just because it's digitally scarce. Like that's just stupid.
It's worth one
And I,
trillion or something, right?
what's that?
It's about 1 trillion at the moment, isn't it?
The market cap. Yeah, that's right.
Yeah.
So like, and that's quite phenomenal when you think about it, right? So $1 trillion worth of value has been created from an idea, and there's nothing material to show what it is. Like that is insane, the type of world that we're living in. But when you think about how we live our lives, most of our life is lived through a glass screen on a bit of technology, and it's virtual. Like that is real. You can feel good or bad about your day just by some tweet that you read. So if that's not a tangible thing, I don't know what is. So it shouldn't be that much of a stretch to realize that something in the digital realm is as real as it can be. And so this intrinsic value, I think, underpins this whole argument. And
Mm.
if I was to guess, I would say that there are aspects of what Warren Buffett would be concerned about that are true, in that it is kind of like gambling. And I would suggest that a lot of people do get involved with crypto and even with Bitcoin, which is the more mature one. I would suggest that a lot of people are in that space because of number go up. It's simple, kind of like property as well, right? Like people buy property not necessarily because they're passionate about keeping people warm and dry. Yeah, there's people like that for sure. And I'm sure no one's against that idea, but they're in it because they know that if they put some money in and they take some time, they're going to be able to get a lot of money out. And a lot of people's motivation is like that in Bitcoin as well. That's just human nature. It's nothing to do with Bitcoin. That says a lot more about people than it does the asset. But what I think's been happening over time is Bitcoin has been showing us what it is originally, and this is according to the white paper, which is the document that Satoshi Nakamoto released. According to the white paper, it was a peer-to-peer electronic cash system. In other words, it was an alternative form of money or a medium of exchange. But what it morphed into, and where it's kind of at right now, is that it is a digital store of value, which is one of the functions of money, but it wasn't really the primary intent of what it was for. It was supposed to be another way of transacting value electronically.
Mm.
So I think, in my suspicion, is that right now it's pivoting, it's changing from a speculative play. In other words, let's all pile in and hope that number go up so that we can take some profit out. It's pivoting from that into a digital safe haven. And what I mean by that, and this is where it fits into a property investor's portfolio, is that you now have a hedge, or you have a portion of what you're investing in, which will go up and down in value for reasons that are different to what affect the performance of your other investments. So we call that a diversifier, something that has a yin for the yang, it zigs for the zags. And that pivot from being a speculative asset, which many people will just go up in value, or hope will just go up in value, to a safe haven asset, happens when the level of uncertainty and disruption within the current financial system reaches a certain point where the masses start to flock into Bitcoin, because that actually feels relatively safe now compared to leaving your money in a bank or leaving it in a traditional investment account or having a mortgage, which you have no control over the interest rate. So I think that could be what comes next.
Mm.
And I find that fascinating because it just speaks to that evolving characteristic of Bitcoin, in that it can change over time. It doesn't change itself, but it can change in terms of what we think it is over time.
Yeah, because I guess if you had to attribute the value to Bitcoin, it's really based on how much people believe in the system being
Totally.
a replacement to the monetary system. Would you not say
Yeah.
that? Like, I know there are
100%.
some smart people out there that are like fully into this. Like, Elon Musk puts a good portion of his cash and of Tesla into this. And you've got Jack Dorsey, like when he left Twitter, he's like I can't think of anything else to do besides, be fully immersed in this. And he went from Twitter to this. I don't know if you notice, like he is in this business called Square. Have you heard
Mhm.
of that?
Yeah. Yes. Yeah.
Yeah. Yeah. So
Yeah.
he's like
Right.
fully into, like he's like a super smart dude, but he's like, actually, this is the future, and I'm gonna like fully invest my time into it.
For people like that to say that, and like with Michael Saylor, CEO of MicroStrategy, for them to put Bitcoin on their treasury, is like when they do that at that level, you got to ask yourself, well, what do they know that we don't know? But just going back to what you're saying, like right now, you and I both have faith that if we find a $20 note on the ground, we'll pick it up, right? Because we believe that somebody will give us some value for that. Like we could take that and we can go and buy $20 worth of eggs, I guess, for that, right? We don't really have faith in Bitcoin to that extent, partly because we can't see it. There's no visual representation of it necessarily, but also because
Isn't it
it's
a
a
gold
really,
coin with a B on
that's right. Yeah. If you ever find one of those, pick it up.
it?
It's probably fake, but whatever. Actually, you can get gold coins that are
It
rich
reminds
and
me
that
of
shit.
like in I don't know if you play Mario, like Mario
Yeah, yeah. As a
Brothers.
kid, I did. Yeah, yeah, yeah.
Yeah, it's like
Yeah,
doing.
it's like that. Yeah, yeah. Well, wouldn't it be cool if that was like that was what really Bitcoin mining was like? It was just playing Super Mario Brothers, collecting all these coins.
Yeah.
What I was saying is that we're not really comfortable as people, like in our relationships and our interactions with people one on one or within communities. We're not really comfortable in formalizing that financially. That hasn't evolved naturally. People generally don't like to talk about money, and therefore Bitcoin didn't evolve with normal human interactions. Instead, somewhere along the line, we learned how to become very dependent on the state. So we need government to do our roads, to do our healthcare, to do our school. That's what we believe. And we're willing to part with a lot of our income through taxes. And we're more than comfortable to be stolen from using the financial system through inflation because we believe that they're acting in our best interest. But over the past 4 or 5 years in particular, that trust has largely diminished, or it's suffered a severe brand challenge. Let's put it that way. And that's why one of the reasons why I think that faith in mathematics is now kind of becoming more popular. And by faith in mathematics, that is what Bitcoin is, because to believe that Bitcoin has value to the point where you would use it as an alternative for the money that you'd find off the street
Hmm.
means that you need to kind of understand that mathematics is a law. It cannot change. It's code. Code is law. So if you're interacting with a technology, a financial technology like that, which is 100% based on mathematics, distributed across computers all over the world that can't be destroyed, it's immutable, and it's outside of government control. Hey, we actually have the evolution of money that we've been looking for so long, that we desperately needed, because it diminishes the role of government in our life to the point where we can actually start to solve problems that previously we couldn't solve. Like,
Hmm.
how do we deal with medical provision? How do we deal with infrastructure investment? A lot of people still can't get it, but a lot of the technology that underpins these crypto assets can be applied to solving a lot of the problems that we have that we currently depend on government for. Money is just the first step.
And I get the idea how, okay, blockchain, you can only get like 21 million or something total Bitcoins, and there's a limited amount that comes out every year.
Yeah.
So that keeps its value. But what's stopping somebody just creating like a brand new blockchain? Like, can't you just create like this is one universe, just create another universe? It's like it was
Yeah.
man-made. Then why can't they
Yeah.
just create like version 2 and 3 and just
And they have. Yeah,
increase?
and they have. Bitcoin Cash is one of them. So it comes down to the community and the network effect. So Bitcoin is the OG because it was the first one, and it's the network effect. More people in it means that it's more likely to succeed. So there's this thing called the Lindy effect, and I'm butchering it, but my version of what the Lindy effect is that the longer a technology exists for, the longer it will persist. And Bitcoin is a novel technology. Well, the Bitcoin technology underneath Bitcoin was quite new and novel, but it's been around the longest. And because it's been around the longest, it's the primary beneficiary of this Lindy effect, which kind of solidifies its position as the number one crypto asset. You and I could probably jump on the Solana network right now, and we could mint our own tokens and have our own Blandon coin at the end of this episode if we really knew what we were doing. Would it have value? Yeah, maybe at with people that you and I know if they were crazy enough to buy it. But it doesn't really matter because we don't have that power to build a network like what's already been built. And so that's kind of why it works, because it's the free market. It's who got there first and who was able to develop value in this ecosystem the fastest. And that was Bitcoin.
Mm. Can it not be replaced like, like an iPhone? Because, maybe when you're holding an iPhone 4, iPhone 5 comes out, all good, iPhone 7, iPhone 8, iPhone 11, by that time, it's like maybe the first few iteration of iPhone, you're like, okay, it's still okay. My iPhone 4 still works. But by the time it's like 11, you're just like, you can't hold on to that anymore. And you just like, it's just like not worth anything at all, right? By that
Yeah.
time. Can that not happen to Bitcoin because of this technology or blockchain itself?
Good. Yeah, it's a good question. I don't know if you understand much about how Teslas work, Landon. Do you own it? You look like you would own a Tesla. I don't know.
Like I'm a basic guy. Yes, I have a Tesla.
Oh, come on. So amazing cars, right? Like they will update and you'll jump in the car the next day and it can do stuff like change the headlights when you're turning around corners, and it couldn't do that before. It's amazing. And that's kind of like what happens with Bitcoin is that you have people whose role it is within the Bitcoin ecosystem to do fixes, to install upgrades. So it is actually improving as time goes on. But the way that it works is that you have to have, it's like majority rules, right? So you have to have these validators on the node that actually sign off on these changes before it can happen. And if they refuse, then you get what's called a fork, either a soft fork or a hard fork. And to my understanding, because I don't really understand it that much, that's where Bitcoin Cash came from quite some time ago when that was the first example of that I'm aware of, where somebody split off from the Bitcoin network and just created something a little bit different. It's now worth diddly squat relative to Bitcoin. So that's just an example of how sometimes just control, copy, paste isn't actually a weakness. Because that's kind of already happened. It's about who has chosen to work on this chain. And the longer they persist with working on that chain, the better the network builds out, the least likely it's going to be possible to usurp that asset.
So I have like two follow-up questions from that. Like number one is, what about the hardware? Because if you're talking about upgrades, we're talking about software. And then the second one is it not a matter of time before the government becomes the moderators, right? Then you kind of
Mm,
lose the decentralized effect and
yeah,
non-government regulated
yeah. I
effect.
love that question. The first one again is probably a bit beyond my pay grade, but it's so when you own Bitcoin, you're not you have to have a wallet. You have to have a digital wallet. Now, it might be a hot wallet, which is an application that runs on your smartphone typically, or it's an extension on your browser, or it could be a little USB device that when you unplug it from the internet, it's called a cold wallet. It can't be hacked, can't be touched. And pros and cons for each one of that. But these wallets are not the entity, or it's not the actual hardware that holds the Bitcoin. All it's doing is it's holding what's called the private keys. And so if you can imagine it, it's like it's a wallet that's owning your house keys. And so anyone can send you assets. Like if I was to send you Bitcoin right now, Blandon, you would put up your QR code on the screen and I would be able to scan it with my phone, and I could directly over Zoom right now, I could transmit Bitcoin to you and it would be there within minutes. But all I'm doing is I'm unleashing the power of my private keys contained in my wallet to move the Bitcoin from one part to another part. If you think of it like that, we're just manipulating. We have the power while we hold these private keys to manipulate a certain quantity of Bitcoin and move it around the network so it sits in your custody. It's not technically correct, but that's kind of the way to look at it. So it's not like you're holding the Bitcoin, you're just holding the ability to access and influence where the Bitcoin goes when you have a wallet.
Hmm.
So if there's changes to it, you're not necessarily in need of updating your wallet. However, because that is again based on mathematics, you still get updates to your wallets. However, that's more from a user experience. That's my
Yes.
understanding of it.
But sorry, maybe
Now,
my question is to do with the hardware of the blockchain. Is the blockchain not a hardware?
no, no, that would be software. My understanding is that would be software, but it sits on hard drives all the way around the world and server farms, right? So there is hardware involved in terms of the Bitcoin miners that are keeping the network going, and there will be improvements in that technology, kind of like graphics cards, if you can imagine that. So that will improve, but the technology that it's running is my understanding that is kind of what it is. That's basically software, unless I'm mistaken,
Hmm.
which could happen.
Sounds like a very, very deep topic that I need to go down a rabbit hole and explore.
It's beyond the level of my rabbit holes, but I can definitely go down the government rabbit hole because this is really interesting, right? Like your question just around, hey, it's decentralized right now. No one government can control it, but isn't it inevitable that eventually a government will control it? That's kind of your question, right?
Mhm.
Um, the This is where we have the conversation that we probably need to have is around what the Bitcoin ETF represents, the exchange traded fund. And just really quickly for listeners who may or may not appreciate what an exchange traded fund or ETF is, effectively it's just a container. It's a wrapper for an investment. So it might be Apple, Amazon, Google, Facebook, Meta, sorry. That's a group of companies contained in a basket, and they call it an exchange traded fund because that's where you would go to invest in it. So that we have a Bitcoin ETF now. It was launched this year in the US, and there's many to choose from now. Even using your Sharesies wallet or your Hatch wallet, you could own a Bitcoin ETF, which means that you don't need to do what I described before, where you have to download a hot wallet or use a cold wallet to hold the keys to your crypto, because there is a fund manager out there who is doing it all for you. Now, the concern with these funds that are out there is that the custodian, which is the entity that holds the investment on behalf of the fund manager in your interest, it creates what we call a honeypot risk, where there's a whole bunch of crypto assets sitting in just one place. And one of the biggest concerns that people who are quite into Bitcoin, we'll call them Bitcoin maxis, have is that at some stage it's possible that a government could just seize control or confiscate, like they did with gold. They could confiscate the assets in the custodians, and therefore they could effectively seize all of the Bitcoin that are held on our behalf as ETF holders, because we don't actually hold them in our direct wallet. We're holding it through this financialized wrapper. And so a lot of people would be concerned that that's what's happening, or that's what's going to happen. So these large fund managers like BlackRock in particular, who are busy out there scooping up all the Bitcoin to put into their Coinbase account, yeah, that could be seized at some stage. It's possible. It's unlikely, but it's possible. And so that would be of a concern. But even then, it's really hard to imagine a situation where one player would hold enough of the Bitcoin to be able to do anything damaging apart from just increase the price. Because as soon as one person holds a large amount of a finite quantity, the remainder that's available for circulation goes up in value. So it's kind of a good thing as well as a risk that there are providers who are creating this honeypot risk.
Hmm.
Does that answer your question?
I guess so. I guess it's uncertain, right? Like I think there are elements of uncertainty, like with all investments, I guess, and it sounds like a lot of things are still being developed. I think some things I need to do more research on, but overall, I think the idea of a more efficient monetary system makes a lot of sense, and a lot of smarter people than me are buying into it. Then probably shouldn't ignore it. So back to my first question, do we need to diversify our portfolio? Do I need to, you know, carve out a portion of my properties and business to be like, yep, actually I should think about putting it in a crypto? How do you think through that? What's the thought
Mm-hmm.
process behind in how you approach it?
Yeah, great question. And I think it comes down to like a really fundamental understanding of what an investment is. And I'll keep it simple, like just so I don't get off track. An investment is a container of value. And so a lot of people who are into property will have more than one property as an investment, as a container of value. If you looked at the property investor who bought all of the properties on just one street. Fantastic. They have 50 investment properties. Awesome. But there's also a little bit of a problem. What happens if there's a massive sinkhole and they all just kind of get swallowed up in this gigantic hole, or they're all, clifftop properties and they all wash away or something, right? So this concentration risk that you have when you have a lot of your investments in just one area. So you would diversify. You would have a property in Hamilton and a property in Wanganui and a property in Queenstown and so on and so forth. You're moving in the right direction, but you still have just one class of investment, which is the property class. So go next up, right? We're going to do commercial property. Great. We're going to do apartments, townhouses, lifestyle blocks. Yeah, there's infinite ways that you can keep on diversifying within the property class. So then you get to a point where you can't actually diversify anymore. So you have to go into a completely different type altogether. And you mentioned business. So you either set up your own business, and if you do, fantastic. Concentration risk again. You have all your eggs tied up in that one basket and you're exposed to all of the risks that could happen there. How do you diversify that? Sell a little bit of your company, take the proceeds, buy somebody else's company. That's basically what's happening when you go and you buy shares in the share market. You're just buying ownership into a whole bunch of companies all at once. So again, you would diversify within that subset of shares to have different types of companies, different industries, different geographies, all sorts of different things. Then you'd have fixed interest, and it goes on and on and on. What's different when you get to the monetary assets is that now you're diversifying at the denominator level. So at the numerator level, you have the asset classes. And what I mean by that is that if you sold your property, what are you going to get? You're going to get New Zealand dollars. If you sold your share portfolio, same thing. All of that wealth has to go through the transmission line of the dollar system. The fiat-based traditional financial system is what has to get that value back to you. But when you diversify at the denominator level, you're saying that this unit of wealth, this container of value that I have, this investment, is denominated in a different material, a different thing. Now that could be gold, maybe. And so you wouldn't find too many things that you would be able to buy with gold. Maybe in a zombie apocalypse, you would in a hurry, that and ammunition, but more or less gold is a standalone investment of itself, right? So it is kind of what it is. It is money and it is the investment as well. Same thing with Bitcoin at the moment. It is the money itself. Yes, you can sell it for dollars, but at the same time, you and I can transact value anywhere in the world, anywhere where there could be a light beam transmitted. You and I could trade value back and forth. We could create an economy throughout the entire galaxy using a financial system that runs off a smartphone, which just blows my mind. And we don't need to translate it into the fiat currency system. So that level of diversification is what I'm talking about, where if there is a failure in one system, you have a problem with all of those numerators. All of those assets that have to get distilled into the dollar system to get to you will all fail if there's a failure in the financial system itself. And so when we have a different denominator, we have hedged against that risk of systemic failure. And so the amount that you need to allocate to that is an interesting conversation, because you actually don't need to do much at all. Because if there's a failure in the traditional financial system, what is a non-traditional monetary asset going to be worth in that world? Basically infinite, right? So that's why one of the principles of diversification that one would do well to follow is what I would call a little dabble do ya, where you don't need a massive amount invested in Bitcoin, for example. You just need somewhere between 1% to 3% if you kind of want to tick the box and say you've done the job, because that's all you really need to get a very decent amount of performance over the long term, of course, without putting your entire portfolio at risk. So I'm not saying that that's what you should do, Blandon, of course, or anybody, but that would be kind of how I would approach it, would be do a little bit of research until you'll feel comfortable to do so, but don't feel like you have to go all in on this. You don't have to be a vegetarian and try the salad, right? Like, you just have to have a little bit on your dish, and that's it. You've done the job. And hey, if we're all a bunch of Muppets and we're wrong, you've lost a little bit of money. Sorry about that. But if we're right, what you've gained is something so much more valuable. It's basically infinite.
But I almost feel like if you are thinking 1%, let's say most people retire between with 1 million to 3 million. And you put like a 1%, it almost feels like it doesn't really do anything.
Yeah.
You
Yeah.
don't
Well,
think so?
and I don't know if you've done the numbers on this, right? But like if you had, say, $10,000 worth of Bitcoin today, that's all you had,
Yeah.
and put it through Chat GPT if you like, and just say, right, what is the
I will help
compounded
you.
annual? Yeah, yeah. Like what is the compounded annual growth rate of Bitcoin? It'll come up and say 230% over the last 10 years, right? Um, Personally, what I would use, if you had a horizon of, say, somewhere between 10 to 20 years, I'd probably say, hey, bring it down to something like 15% as a compounded annual growth rate. I know it sounds very small relative to the 230% that we have seen, but it will probably go down over time, how well it grows. But when you look at that over a 20-year time frame, like if you were 45 years old, you plan to be retiring in 20 years at the age of 65, and you put 10 grand in and you had a 15% compounded growth rate. I don't know if you're doing the numbers right now, Blennon, but that still turns out to be a relatively significant pot of money, is what I would suggest.
I'm putting in ChatGPT now. Let's say if you got 15% annual growth rate over the next 20 years, $10,000, I would be worth 163,000. So let's say if it's 1%, it could grow to almost 3% of your portfolio just on a
Yeah,
15% annual compounded growth rate.
that's right. And over 30 years, 10 grand turns into 850,000 at 15% annual growth rate. And it's only 10,000 now. So like a lot of this doesn't need to be that complicated and that difficult, right? Like not a lot, but there are some KiwiSaver options that you could choose today, which would allow you to allocate 10% of your KiwiSaver to a Bitcoin fund. And let's say, for example, you had $100,000 in traditional funds within your KiwiSaver, but you had 10% allocated towards Bitcoin. Well, just that 10% alone, if it was 10 grand and you didn't contribute anything at all for 30 years, just that 10 grand portion turns out to be, I think exactly it's 864,000. And that's at a 15% growth rate. In the last 10 years, we've seen about 230% growth rate. So again, little dabble do you is the principle here, because it is still early, right? Like 2009 was not that long ago. So that's where we have to apply a layer of reason here that, and I understand it to the point where I would put in potentially more than just 10%. And if I had 100 grand, I would probably want to put in a bit more as a higher percentage when I'm just starting out. But as time goes on, my traditional investments might grow to a point where it's only 1%. It's
Mm.
okay, because over the long term, you're still going to get the job done, and you're not going to put your mainstream investing at risk. And I think that's really important principle to follow.
Yeah, that's awesome. So like if someone wanted to get started in crypto, like what are the basic steps that they can take?
Yeah. Well, I'm glad you asked. I'm glad you asked, Blennon. So there's like a couple of things, right? There's a phrase out there that says, hey, do 1,000 hours research. That's a lot of time, right? I know that even just today, you would have done a bit of research just to have the conversation, to form some questions, like I did about 7 years ago or so when I first learned about Bitcoin. I actually had to do some proper research because I was having a podcast about it. So put in some time. Just go online and just try to your best to wade through all the noise and change channels and find the voice that you resonate with, so that you just feel comfortable to learn. That's all you need to do, is just learn, let your eyes be open, see it for what it is, not for what it's like, but for what it is. And I think most people will probably come to their own conclusions quite naturally that way. But there are other things that you can do. You could talk to a financial advisor. Now, I know that most financial advisors would struggle with Bitcoin because of this general principle, which affected me as well, to be honest, which is that it's really hard to convince it's really hard to convince someone of something new when their entire revenue model depends on them not understanding it. And so you have this bias within the traditional financial services industry where they're anti-Bitcoin, either explicitly or implicitly, because there's no revenue model. There's nothing in it for me having this conversation with you. I don't benefit by seeing people, open their minds like this, and neither would you. So there's very little benefit for it, but it's really important. And so that would be one thing, would still be to reach out for financial advice so that after you've done your research, you've still tested it against someone who doesn't agree with it, who hopefully has a level of education and authority which could then challenge you. It'll just test things. And then the third thing that I would love to give away, and I'll send you a link so that you can share it in the notes. This has just come out in partnership with Easy Crypto, which is New Zealand's largest crypto retailer, which is where you would go to buy and sell crypto to send to your own digital wallet. We've arranged a 5-part free online course that people can do right now. And it'll take you through the 5 key things that you need to understand. It's called Crypto 101, Crypto with Confidence. And if you want to get started with crypto because you understand it to the point where you want to do it, doing this course will ensure that you've done everything you can to not lose money and hopefully make some money. Hopefully you'll make it into a success other than what most people do, which is to lose money as part of their education. So there's some formal stuff that you could do, and I'm sure there's other online courses that you could do. A lot of really cool people that you could follow, but then also test it by getting some financial advice, even though you might not like it.
Awesome, Darcy. So yeah, let's sign me up for that 1% of a Bitcoin.
Sweet, man. All right. Well, after we stop recording, all you need to do is grab your app on your phone. You show me your QR code, and then I'll send you that Bitcoin. It's just a shame that I lost it all on that boating accident, but I'm sure I've got some lying around somewhere that I can give you.
That's awesome. Thank you so much, Darcy. Thanks for sharing your insights today. And I hope you guys found something valuable, learning more about, okay, how can you diversify your portfolio? Because, a lot of us do just really focus on the one asset, which is like property and perhaps just money in the bank. And I guess this is maybe like a seed for you to want to learn more. And like Darcy said, there's a free course, Easy Crypto. It's it's the CEO is Janine, is it? She's Kiwi.
Yeah, Janine Granger. Yeah, so Janine and Ellen Granger started Easy Crypto as just a startup, and they've done incredibly well.
Yeah.
Really, really open, transparent, awesome people to lead that company in New Zealand. So yeah, definitely check it out. So it's in partnership with my business. We produce this course, really high quality compared to the stuff that I normally put out there. So I think people would really enjoy that. Yeah.
Awesome. And of course, if you guys need financial advice, always seek out a financial advisor. Until next time, I'll see you guys again.